This has genuinely been one of the messiest weeks I've covered on this channel in a while. Oil crossed a level we haven't seen since May. The Australian share market just had its worst single session in 5 weeks. And there's a piece of data landing in just a few days that's going to directly influence whether your mortgage repayment goes up again next month. If you've been busy this week and missed all of it, don't worry, that's exactly what this video is for. I'm going to walk you through everything that actually happened, why it happened, and more importantly, how it all connects, because none of these stories exist on their own. And stick around for the very last part, because there's one number coming out next week that honestly matters more than everything else in this video combined. Hey guys, Daniel here. Welcome back to Daniel Reports. If you're new here, this is where I break down what's actually happening with money, markets, and the economy in Australia in plain English, no jargon. And this week genuinely felt like 3 separate stories that all turned out to be the same story once you actually connect the dots. Let's get into it. If you find this useful, do me a favor before we go further. Hit subscribe, tap that like button. It takes 2 seconds and it genuinely helps this channel keep growing. All right, let's start with the big one. The conflict overseas that's been simmering for months took a serious turn this week. Reports came through of the situation escalating further with talk of a much larger scale response and the conflict actually spreading into the Red Sea region. Now, I'm not going to pretend to be a defense analyst on this channel. That's not my lane. But what I can tell you is exactly how markets reacted, because that's where this becomes relevant to your everyday life. Oil prices surged. Brent crude crossed $100 a barrel for the first time since May. Let that number sink in for a second, because it's not just a headline for traders, it's the number that eventually shows up on the sign at your local servo. Quick pause here, because I know some of you are thinking, all right, Daniel, oil prices, that's a global story. How does that actually touch me? Stick with me, because the next part is exactly where this gets personal. Here's where it gets genuinely frustrating if you're an everyday Australian trying to plan a budget. Back on the 1st of July, the government's fuel excise relief, the temporary cut that had been softening prices at the pump, got halved. It went from a 32-cent a litre reduction down to just 16 cents. So you were already about to see prices creep up from that alone. And now, on top of that, global oil prices are surging because of this exact conflict. Picture it like 2 taps both being turned the same direction at once. One is government policy easing off the relief. The other is the global oil market getting more expensive. Neither one on its own would be dramatic. Together, you're going to feel it at the pump pretty quickly. And here's the part that's genuinely worth remembering, because it's coming regardless of anything else happening globally. The remaining piece of that fuel relief is scheduled to disappear completely in early August. So if you've got a big drive coming up, or you're due for a fill anyway, sooner is probably better than later. Now let's talk about what all of this did to the share market, because Friday was genuinely rough. The ASX 200 dropped 0.75% in a single session, its worst day in 5 weeks. And it wasn't a one-off blip either. Once you add up the whole week, the index finished lower for the 3rd week running. Here's the part I actually find more interesting than the headline number though, because not everything fell the same way. Tech stocks got smashed. Names like Xero, WiseTech, and Megaport all dropped somewhere between 3 and 4.5%. But at the exact same time, the big 4 banks actually rose, somewhere between 1 and 1.5%. Think about that for a second. Same market, same day, same global conflict in the background, and 2 completely opposite reactions depending on which sector you were looking at. Here's how I'd explain that to a mate. It's a bit like a storm rolling through a street. Some houses get their roof damaged and the house right next door barely notices a thing because of how each one was actually built. That's exactly what happened across the market this week. Some sectors were exposed to the storm, others were genuinely sheltered from it. Now, before this starts sounding like pure bad news, because it's honestly not all bad, here's the part that gave me a bit of relief while I was digging through this week's data. Despite everything happening globally, Australia's business conditions index for July actually improved, rising to 52.6. That's genuinely a positive signal, because it means business is on the ground. The people actually running operations day to day reported things like employment and new orders holding up better than expected. My honest take on this: the stock market often reacts to fear and headlines in real time. This business conditions number reflects what's actually happening inside real Australian companies. And right now, those 2 things are telling slightly different stories, which is honestly one of the more fascinating parts of this whole week. Let's talk jobs for a second, because this ties directly into what's coming next for interest rates. June's employment data came in strong, genuinely strong. Now, normally strong jobs numbers are something to celebrate, but in this specific environment, with inflation already running hot, a strong labor market actually increases the odds of the Reserve Bank hiking rates again, on top of the 3 hikes we've already had this year. It's a strange twist where good news for workers can end up meaning tougher news for borrowers, and that tension is exactly what's playing out right now. There was one more piece of this week's puzzle worth mentioning. because it adds to the global uncertainty. The Trump administration announced new tariffs affecting 60 different trading partners this week. I won't go deep into the politics of that here, but the practical impact for us is simple. More global trade friction generally means more uncertainty for markets and more upward pressure on prices worldwide, which eventually filters back into what we pay here in Australia too. All right, here's the part I promised you at the start, and honestly, this is the single most important thing in this entire video. Next week, Australia's inflation figures for the June quarter get released. This is genuinely a big deal because this specific number is going to heavily influence what the Reserve Bank does at their next meeting in August. Here's the three scenarios in plain English. If inflation comes in hotter than expected, that strengthens the case for yet another rate hike. If it comes in cooler, the Reserve Bank gets a bit of breathing room to hold steady. And either way, this number is going to directly shape what happens to mortgage repayments across the entire country. My honest take here, everything we've talked about this week, the conflict, the oil surge, the fuel prices, the strong jobs data, all of it eventually funnels into this one number. It's genuinely the piece of data I'll be watching most closely over the next few days. So what does all of this actually mean for you, sitting there right now? If you're due for a fuel fill-up, this is probably not the week to put it off. Prices are heading in one direction from here. If you've got investments, particularly in tech stocks, it's worth understanding why they've been more exposed this week compared to sectors like banking. And if you're a mortgage holder, keep an eye on next week's inflation number because it's going to tell us a lot more about your next repayment than any headline this week did. So let's bring it all together because I know that's a lot to take in for one video. A conflict overseas pushed oil higher. That flowed straight into fuel prices here, right as government relief was already stepping back. The share market wobbled, but not evenly. Some sectors held up fine while others took a real hit. Business conditions actually improved despite all of it. And now, everything is waiting on one number landing next week. Here's my honest take to wrap this one up. Weeks like this can feel chaotic if you're just scrolling headlines one at a time. But when you actually connect them together like we just did, it stops feeling random and starts looking like one continuous story with a very clear next chapter coming. If this helped you actually make sense of the week, drop a comment and let me know what stood out to you the most. Was it the oil price, the market sell-off, or the jobs data? I read every single comment, and honestly, it shapes what I dig into next. And if you know someone who's been feeling a bit lost with all the headlines this week, send this video their way. Sometimes all it takes is someone actually connecting the dots for you. I'll be covering next week's inflation figures the moment they land because depending on what they show, this entire story could shift again pretty quickly. Hit subscribe if you want to stay ahead of it instead of catching up after the fact. I'm Daniel, this has been Daniel Reports, and I'll see you in the next one.